Now, Adcorp has announced a strategic partnership with a Singapore-based APBA. In South Africa, we always abbreviate these things into acronyms like APBA. It sounds like a bank, one of our banks. Richard Pike, the Chief Executive of Adcorp, there's another abbreviation for you, joins us now for more. Hello, Richard.
Hi.
So the Singapore grip that you've taken, why? What are you doing?
Our strategy with regard to where we wanted to play as a group, it evolved probably in about 2011, and we decided that Africa and the Asia-Pacific regions were the areas that we saw ourselves playing a particular role. We've made a number of acquisitions in Australia. In fact, we announced another one in the oil and gas space just over 2 weeks ago called Dare, which is a $30 million acquisition. And we opened an office in Singapore in October of last year, and we've resourced that office. And what the plan is to put all of our non-South African assets, which is about 11 African countries. We have an investment in India. We have now 3 businesses in Australia, and now we've entered into this relationship that we'll talk about now, this APBA relationship, put those under the Singapore entity and look to potentially take that to a listing in the Asia-Pacific region and in the sort of 2018 type of time frame, with a view to actually raising capital in that market, so collateralizing all these assets, raising capital to further expand in what we think is a very exciting geography. The APBA asset, we've got an irrevocable option that we can exercise in 3 years to buy into the equity of it. In exchange for that, we're helping them fund and strategize a lot of their growth. But what it does, it gets us into a core market. It's Singapore-based, but it's got offices in Singapore, it's got offices in China, it's got offices in Hong Kong and in Japan, and that's the center of the Asian universe from a staffing point of view. So an exciting opportunity.
Richard, exciting times indeed. Now, with that geographic spread, we're seeing Asia. You made a mention of the Dare investment in Australia, of course, and you still have Africa and South Africa. How does this change the balance of the company in terms of the weightage of revenue streams? Where are you going to be making the most money?
Yeah, so at the moment, the core of the business is still South Africa. About 60% of our profit is derived from Africa. It's probably better to talk profit than revenue because our margins are all different from different parts. So 40% is non-South Africa at the moment. And we see that balance tipping to the extent that we want to end up somewhere around about a third Africa, a third Asia, and a third Australia. That's where we're working towards. And that will imply some more acquisitions in the Asia-Pac space, and particularly in the Asia space, which is statistically where 52% of the world's population are going to work in 2030. So if you're not in that market, you can't call yourself a serious player in staffing.
Wayne, you think of it as a South African company, but it's not anymore.
No, it's certainly expanding. Richard, a little bit outside of Adcorp now, how do you see the labour situation in South Africa developing, specifically now with what we're seeing in COSATU? Do you think we're going to have a tough year?
Wayne, I'm an optimist, I must tell you, by trade, but I'm really worried about what I see. First of all, you've got a sluggish economy, so that doesn't help employment. Then you've got this jockeying, as you mentioned, you're seeing the split in COSATU, and the way that the trade unions typically mobilize members is through militancy, and so I think we're going to see an increase in that. And then you overlay this new labour legislation that's now coming in January, and what we're seeing in our client base is just absolute confusion. No one knows how to deal with it. They've kind of woken up at the 11th hour and trying to grapple with this, and we're seeing it costing jobs. It's definitely costing jobs, and it's costing a lot of jobs in this economy. So I think if you take those 3 factors in combination, it's not a happy scene overall from an employment perspective, and there's nothing that I see on the horizon that's going to change that situation anytime soon.
Richard, going back to the Singapore, and it's related in a way to what you've just said and what Wayne has asked, is the environment in a place like Singapore. On the one hand, very free market. They built this, Lee Kuan Yew died a couple of weeks ago, built this island into this massive economy. On the other hand, quite tough with government intervention in certain ways. So for a company like yours, how does the air smell in Singapore?
Well, it's been quite a revelation. In terms of the competitiveness report, Singapore ranks as the easiest place in the world to do business. Yeah. And what is fascinating is when we set up last year, I got a call from the what they call the IE, the people that promote inward investment, and they came to see me, and they probably spent 2 hours with me and said, what can we do with you, for you, how can we help you? I then got a call from the delegates in South Africa and said, our guys came to see you. Is there anything that we could do on top of? Were you happy with the support you got? And it's amazing just how welcomed you're made to feel. They can't do enough to welcome you into that environment. And I kind of think in our situation here, we're doing everything to repel people.
Let's talk a little bit, taking a couple of steps back to the merger with Kelly. Has the dust settled? Are you finding your feet? How's that partnership panning out?
The dust hasn't settled yet. We've got a program in place to integrate the business of Kelly into our organization. So our strategy, typically when we acquire businesses that are successful, strong management teams, strong brands and strong positioning. And we typically leave their inherent DNA alone and try and enable them. Kelly's been a little bit different in that we're integrating a lot of their operations into existing operations here because of the overlap. And we've got a project plan that will culminate in August of this year. So the dust will finally settle in August. But it's positive and it's great, and I think it's a really good opportunity. And if I look at our positioning now, we span all the areas of the market that we need to be in the South African environment. We're very strong in the skills base, and whilst I mentioned earlier, I'm quite negative about overall employment prospects in South Africa. I think our positioning in South Africa is very good, and our opportunity to take market share is very good.
Well, that's been a very exciting conversation. Ease of doing business in Singapore, again, another one to highlight. Number one in the world, David.
Why do we make it so difficult here to do business? And as I say, a South African company that's actually not South African anymore.
Or not staying South African anymore. Very big thank you to Richard Pike. He is, of course, the Chief Executive at Adcorp, talking all things from their breakthrough in Singapore as well as the labour situation in South Africa.